Markets are shifting. Signals are stacking. Are you reading the noise or the move? Welcome to Daily Market Waves from Investing Angles, where every candle has a voice and every wave tells a story. Today's session dives into volatility, sliding lower, but will it snap back? Dollar, losing steam, one tick at a time. Yields, are they just pausing before another leg down? In commodities, natural gas is speaking loud and clear. Oil is throwing caution flags. Silver stays undecided. And copper, well, the weekly chart might be cooking something big. S&P 500 and Nasdaq. We map the multi-angle structure and decode Elliott Wave signals you won't find anywhere else. Feature of the day, Palantir. Is it holding, building, or cracking? And the special review, Russell's monthly technical story, a play our ultimate members read weeks ago. However, now it updated with fresh insights. Whether you are tracking reversal, planning in entries, or just sharpening your tactical edge, this is your daily edge. Let's dive in. And as usual, we start with volatility. This is the daily candles for volatility index and volatility index futures. So far, we are seeing that volatility closed with a bearish candle, signaling continuation down. And how far would it go? This is still a question. The same thing is happening on the futures. They are slowly moving down. However, they are still holding above the critical support lines. And this is indeed a big question. So what we are seeing on the 3-day frame, which also closed today, volatility most likely formed an in-neck pattern, which is a bullish continuation pattern. However, now we have 2 or even 3 days for lower volatility until this pattern confirms. For the futures, they formed an incomplete dark cloud cover, which is also considered a bullish continuation candle. Well, even though we will look for lower volatility in the next couple of days, the longer term perspective is bullish. Now let's have a look at the dollar. So the dollar looks like it is falling, and with the chances of moving lower and making a new lower low. So this is a very strong bearish closure today on the daily frame, and the 5-day frame, which is also closing in 2 hour 30 minutes, is going to be either dark cloud cover or even a bearish harami. So bearish engulfing. So far, well, while we were talking, it's big moves up and down. So it's indeed difficult to say what kind of candle it closes today. Let's see what it will be in the end of the day. So far, I wouldn't bet on either side. And speaking about the dollar long-term chart, we were expecting it to move and complete the wave for one wave or the other. Potentially, it could be a diagonal, but we cannot reject an impulse at this point. So far, this is remaining our main guide. Now let's talk about the bond market and the yields and TLT. So this is the TLT closure today, the candles, and many would think that this candle is similar to what we had just 2 weeks ago. However, it is totally different beast, and I would say this is an incomplete dark cloud cover, which has slightly better chances for a bullish continuation. And particularly tomorrow, I think we should expect a 50 by 100 days moving average bullish cross, which would support a continued move higher. Speaking about the daily frame is neutral bullish also, and the chances for a continued move upward. The weekly is still undecided within the range, and if it closes above this big green candle on Friday, it would be a bullish confirmation of a bottom. And speaking about our Elliott Wave, this is the chart that we've been tracking for a while, and right now TLT is possibly forming a very nice impulse upward here, targeting 95, 98 range. So far, this could be beginning of wave 3 at this point. Well, now let's have a look at the yield. So yield for 10-year closed today with a bearish continuation candle. Everything on track, 50 over 100 days moving average bearish cross, a flag, and a second confirmation of a flag breakdown and rejection at the 100 period moving average, which technically a 200 days moving average. And the flag target is here, remains unchanged. The same for the weekly. So far it is looking bearish. Let's see how it closes. This is the 20-year yield, a similar pattern. We have a bearish flag for our chart. This is the flag target. No changes here. And speaking about the larger picture, 2, 5, 10, 20, and 30-year yields, what we are seeing is a strong break below the 200 days moving average by 10 and 20-year. The other ones also formed bearish continuation candles, expecting a continued move down. So this is about bond. Now let's talk about commodities. Today we'll discuss natural gas, silver, oil, and a new one, copper. I wanted to share one potential setup that I am looking right now. So let's start with natural gas. And this would be a very quick update. So what candles are speaking here? So yesterday bearish candle wasn't very strong, and we outlined this in our daily report, saying that there is a good potential for stopping or even reversing here. So this is the green candle today is doing exactly that. And if it closes like this, there are still 28 minutes to go. This would be technically a stop for a bearish move, potentially reversing the trend. And the three-day frame closes with an incomplete dark cloud cover, which is also regarded as a bullish continuation candle. The weekly, after closing with a bullish candle, so far it's neutral. Let's see how it develops. There are good chances for a moving higher. So the waves are still developing and it's still 30 minutes till closure, I will discuss Elliott Waves and the most immediate targets with our customers in our daily report at investingangles.com. Right, so next is silver. Let's have a look at what silver is telling us. So far there are 1.5 hours to go. And this candle so far, it is looking bullish, potentially signaling a stop here. And this, in this case, it would be a rising 3 methods if it closes a little higher. Let's see how it closes. So far, it is leaning bullish. The weekly frame is neutral, and the 5-day frame, so far, it's also neutral. We don't have other frames closing today, and the momentum is not fairly clean. But let's have a look at the Elliott Waves. So the Elliott Waves is very complex at this moment, and I was expecting a move down impulsively. However, it didn't work, so I had to invalidate this potential count, and now we'll be looking for possible two. It's either A, B, C here for A, B, C, and the bigger wave C here, or this would potentially be an an ending diagonal, an expanding ending diagonal for wave 5. And if we look at the slightly bigger frame, this is what we have been tracking so far. We know that this is important level, 34.863. If silver goes above this level, the red count would be technically invalidated, but the blue and the potential green will be still on the table. Let's see how silver goes. Silver completes in the next couple of days, and particularly I would be very interested in the weekly closure. So far, silver is close to neutral. Speaking about the SLV trust, so it closed today with a neutral candle. It could flip bearish or bullish considering the bigger picture, and the 2-day frame is also closer to neutral, slightly bearish. So there is no clear decision here. We need to wait for the weekly frame, which is closing on Friday. Now let's move on to oil. Oil is what oil candles are telling us. So first of all, yesterday we had a strong bearish hammer, and it looks like today oil had a chance, very good chance to negate the hammer, cancel it, but unfortunately it lost steam at the very top, and right now it is falling down. If it closes with a candle like this, I would say that the bearish odds would prevail slightly, but with a very significant chances for a reversal. And the 2-day frame is forming a doji that would be neutral one. And all eyes on the weekly closure, which is on Friday, and this level 70.375 is of critical importance. A closure above would form a tower bottom. If it closes below, anything would be a failure, and the bearish odds would just escalate. On the Elliott Wave formation, we've been tracking this flag. So far, this wave here is corrective, and at some point it just needs to close and resolve downward. That's our expectation at the moment for oil. Now let's have a look at copper. I looked at it today and found a very interesting setup. So this is I'm not revealing everything here, so just the candle setup, and but there are quite a few technical and Elliott Wave formation behind this call. I'm planning to post it on investingangles.com later this week. So, but the setup is here. So this is what needs to happen. The weekly candle needs to close below this level, 50620. If it does, then it's going to be a strong bearish reversal, a tower top or a spinning top with a bearish engulfing. And if the wave moves below the 4.8365, this would be a completion of a bigger top. And in this case, I would be looking for these targets. The best case scenario is 3.1315, and the worst case scenario is 1.9355. And this would be quite a move. So for this one, it would be a 38. Let's measure from the top. So from the top, it would be 40% loss, 41. And for the worst case scenario, it would be 63-64% loss. That's quite a setup. All right, so let's move now to the stock market, and we will start as usual with the candles and the S&P500. So today's closure was technically bullish, and there are no strong signals about the reversal. I would say that S&P 500 moved above the 8 days moving average. Nasdaq is slightly behind, which is unusual. And the Dow Jones is actually, it closed just above the 200 days moving average, which is a very strong move. However, it wasn't able to fully confirm the bottom on the daily frame, so we would need to see bigger picture. And the same for IWM for Russell, a very strong bullish candle. If we look at the bigger frames, however, the futures are not as bullish as their daily counterparts. So far, these candles are somewhat neutral, and most likely we will see a move down. However, they might also trigger, as these are dojis, they are somewhat neutral. We might see a reversal, at least a temporary bounce here. So that's the perspective of candles. Now let's have a look at the sectors. So the sectors are fairly encouraging today. Industrial moved above the 200 days moving average. Financial formed a bottom technically, and the technology also made a strong bullish candle. Consumer, discretionary, and energy are all bullish, and utilities are also bullish. The only two sectors that are not quite aligned is healthcare and consumer staples. So they might see a weakness tomorrow. So the chances for tomorrow move upward are substantial based on this picture. And speaking about large cap stocks, Microsoft, Amazon, Nvidia, Meta, Apple, Tesla, Berkshire Hathaway, and that's it. So just 7 of them formed bullish candles. Unfortunately, I cannot say the same about Google, because this third candle could form the following 3 methods. So there are still chances for weakness for the giant tomorrow. However, most of the stocks here in this sample are bullish. And now let's have a look at Elliott Waves. So this is the perspective, very interesting one. So up till now, it has been forming a corrective wave, possibly wave 1, and now we see a very strong candle down. After hours, this was probably going to be wave 2. So I would expect some move higher tomorrow, potentially. However, it's not that clear, if especially if we see a lower low today. But what today's move higher did, it invalidated the blue counts technically. If you remember this one, we were tracking since the end of March. So the blue counts have been invalidated because of this move, and the red is still on the table. And that would be very interesting if this is if this wave completes here. Well, it's still moving, and moving very sharply. Well, let's see what happens tomorrow. So far, it might be a game changer. And speaking about Nasdaq, the same thing happening here. So this wave is more complex, and because of the lower low here, which could potentially be wave 3 ending. And now with this move, we would need to see a closure, exact closure of today in 17 minutes. But I think that better perspective right now is for the purple count, or it could be a blue count, but this would be wave 4, bigger wave 4. However, wave A is also on the table. Now that's all about major indices, and now let's move to the feature of the day, and the first one is Palantir. What we are seeing after the monthly closure, that the candle was technically bearish. However, it wasn't exhaustively bearish, it wasn't very strong, and we need a confirmation here. If we look at the larger frame, for example, the 3 months frame, this candle is definitely has more bearish qualities. And the next candle, the current candle of April, it needs to make quite a big rally in order to make a bullish move. I would say about 48-50% in 1 month. Well, it's possible. Let's see whether it's probable or not. And with Palantir being grossly oversold, I have a few doubts here. So this is the 10-day frame, strong dark cloud cover, and as I mentioned before, you might see several periods of consolidation before the next move lower, and potentially this is what is happening. So the next candle is closing in 12 days, so we have some time to wait. The daily so far looks bullish, and we need to assess it from the Elliott Wave perspective. So this is the chart that we discussed earlier in January. Oh, today is April 2nd. This is the chart that we discussed in January. This is how we projected it, and Palantir indeed made a higher high, and after that it moved down, like as we said at the beginning of February. After that it may manage to lose about 40% top to the bottom, and right now it is forming some sort of consolidating wave, and in order to understand it, we need to have a look at this wave. So this is the wave that we shared on March 12th. Potentially Palantir formed a very nice impulse down, and which we treat as wave A of a bigger correction. Now what it does, it is forming potentially a zigzag, and now we need to do some adjustments. So this is wave A, this is potentially wave B, either here or maybe here. Then we would have wave C potentially ending 0.50618, retracing at least half of the wave A. And well, that's it looks like this zigzag is fairly classical. That's what we will be looking for, and this would be the target for wave B and C, or potentially wave 2. So that's our perspective for Palantir, and I'd like to update the date. So April the 2nd, that's the perspective for now. Let's see how it completes this potential, another part of zigzag, and moves higher. And the final feature of the day, something that only our ultimate customers would be looking for, is Russell. Let's have a look from multiple perspectives. So first of all, Russell today closed the month and the quarter with very strong bearish candles. Potentially quarter is a tower top, not fully complete, but very close to it. And the monthly is just a bearish continuation candle, which broke through the 50 months moving average, which is a very strong event, technical event. The weekly last week closed with the bearish engulfing. Now we have a good chances to move lower. And the same for the daily frame. Right now it is moving lower, losing everything it gained today. If we look at the bigger frame, this is the chart that we shared way back in November, I believe. Yes, end of November. Then we said that Russell is very close to forming a top, and this is when we started tracking the wave down. So far it is moving impulsively, and it's a very concerning part of it. Okay, so we discussed this one. Now let's move on to the large, very large frame. This is an all-time chart, and we've been tracking this since year 2020. Maybe in the next update I'll show you how it looked in January 2020, and this is what it was in January 5th, 2025. So what we are seeing here after our call, technically Russell is moving down and it's already close to targeting to our first target, which would be either wave A of a bigger wave, A, B, C down, or wave A of or wave 1 of wave 4 or wave C. Now the most concerning parts. So this is the quarterly MACD bearish cross that Russell made in Q1. Along with the monthly quarterly, with the monthly bearish cross, it also formed a quarterly. It is a very rare event, and we had only a handful of them before. So we did some statistical estimates and run it a couple of times already. So what we are seeing is that potentially, based on the statistics here and the history, after that cross, we would be looking for at least, not at least, for an average 5 quarters of decline. And on average, again, on average, Russell would lose about 42%. And this would be the target, 1420. Well, that's the perspective from the quarterly. And I'd like to show one more very unsettling chart. So I've been tracking this potential MACD cross and corresponding candle formation for 3 years, ever since the Russell 2000 formed a tower top on the semi-annual chart here. Now, with the monthly and quarterly frames having delivered their own bearish confirmations, the conditions appear increasingly favorable for this rare and powerful signal to complete. Russell now has a fair chance of recording a semi-annual MACD bearish cross at the end of June, a highly significant development. If it's confirmed, it would be only the third such cross on record, with the previous two occurring in 2001 and 2008, just before two of the most infamous bear markets of the modern era. Each of those declines lasted approximately 2 to 2.5 years and wiped out an average of 55 of the index value, 55%. But this time may be even more dramatic. The prospective cross would be of record magnitude, roughly 130% higher than the prior two, which were nearly identical in scale. If history repeats, even if its best case form, echoing 2001 or 2008, we could see Russell head towards 1120, bottoming sometime between mid-2026 and Q3 of the same year, if the magnitude plays a stronger role. This bear market could extend into 2027 or even 2028, and a return to the March 2020 low of 966 would not be out of the question. For context, I suggested this very target back to the 2020 lows on a radio panel in mid-2024. The reaction was dismissive at best. But now, with this alignment of candlesticks, technicals, and long-term momentum, we may be watching it take shape. From a candlestick and structural standpoint, Russell appears to be forming a setup for an extended falling 3 methods, and is currently on track to print a bearish engulfing on the semi-annual chart. If that combination materializes by the end of June, it would form a textbook setup for extended downside, what could be called a nuclear combo of technical signals. In such a case, the index could explore the entire Bollinger Range and potentially find support near the lower band, which currently sits around 1100. So, and I'm talking about this one. Looking at the very long-term Elliott Wave chart, the index appears to be working through cycle wave 4, which, according to Elliott Wave theory, often retraces to the territory of wave 4 of the previous degree. In Russell's case, that's once again the March 2020 low. Another alignment? I don't believe in consequences of this scale. In summary, I genuinely hope that this scenario doesn't play out, but we need to recognize the setup, understand the implications, and prepare for the possibility. The next few months could be critical. And to wrap it up, from volatility's drift to copper's silent setup and the Russell's not so surprising closure, today's wave are already shaping tomorrow's trends. So what's your take? Is Palantir holding strong or ready to break down? Are commodities signaling early turns? Drop your thoughts in the comments. And don't forget to like, subscribe, ring that bell, and share the video across your trading circles. Massive thanks to all our subscribers, especially the new ones joining this week. Ready to live calls and real-time setups? Join our private Discord rooms led by Master Trader Kyle and Swing Trade Pro David. Until next time, stay sharp, stay objective, and remember, at Investing Angles, we chart the term before the herd even flinches.